We're going live.
Okay, welcome everybody to our podcast, Compound Stock Earnings / Micro Moment Trading. I want to welcome you. We still have Micah's here. I'm here, and we're waiting for Tim to be here. I'm sure he'll be here shortly, but we'll get it started. You might want to go to our website, www.micromomenttrading.com, and check that out. It's exactly what was on the old Compound Stock Earnings website, but it has all the new stuff. It has all the old stuff there, plus all the new stuff for the micro moment. And I say the old stuff, it's all still current. We have all our seminars on that website. You can subscribe to the free Cal Report, which comes out every Friday. It's been published for about 20 years. And it has emails in there from all our clients asking questions, telling us how they're doing, and just making general comments. And we respond to all those. It's a great read, and it comes out every Friday afternoon. It's dated on a Saturday, but it comes out on Friday. It's totally free. You also find out about all the services we offer through micro moment trading, and also all the services, charting services, and everything that is that we still do under Compound Stock Earnings. And so it's really it's www.micromomenttrading.com. And I have Micah here, and he's in charge. He and Tim are doing our micro moment trading, and I don't know what's holding Tim up, but he'll get here. Meanwhile, we'll start with Micah. So Micah, what happened today? We were up about 15% for the day, I think.
Yeah, it was a good day. I just missed this put on SPY. I was just about in it from 77. It's at 81 now, so just missed it, but. Moves like this today, they're kind of paused, very hesitant, and then they're just taking off instantaneously. So it's been a little tough to catch anything today. Movement's a little awkward all at once. So the timing has to be perfect.
Hey guys, can you hear me?
Yeah, we can hear you.
Yeah, we can't see you though.
Can't see you. Yeah, he'll come back. That's Tim, folks. We only had five.
I don't know how we hear Tim because he hasn't checked in yet. Is he on one of your phones?
No, it wasn't. Not on my phone.
Okay. All right. I'll be looking for him.
Yeah, here's the background on the micro moment trading. It's a subscription service. This is tomorrow's the end of the 42nd week of the service. It's been a subscription service. We've been doing it for about 3 years. But as a subscription service, tomorrow will be the end of the 42nd week. Now, through the end of the 41st week, which was last Friday, we were up 4,725.48%. That's about 115.2% a week. Monday was not a trading day this week, but Tuesday we did 33.54. Yesterday, 17.02, and about 14.76 today. And like Micah said, it's really been kind of slow days market-wise. So it's just incredible. Micah and Tim have what we call a session every morning when the market opens at 8:30 Central Time, and usually lasts about an hour to 9:30, sometimes 9:45. And you subscribe to their service, which, by the way, you can find many, I think 4, 5, or 6 sessions on YouTube that are recorded. They're actual sessions, and you can see exactly and precisely what you're getting when you attend these sessions. Now, the ones you're seeing on YouTube don't go do much good because they're obviously not being done at the moment. But they go out and they do their trades. They're using real money, and it's really a fantastic service. Usually lasts, like I say, an hour and 15 minutes, and that's Monday through Friday. So it's really a good service. And also, don't forget, if you're attending this right now on YouTube, you can type in any questions that you want to ask, because Tim was supposed to be here and describe a new technique. He may not make it. If he doesn't make it, since he's not here yet, he's obviously having some problem getting on. Then during our regular sessions tomorrow, there he is. Hey, Tim. Tim, can you hear us? I don't know. Anyhow, during our regular session tomorrow, he'll explain it again during our regular morning session. Besides, on Friday we have we call it fantastic. Hey, there's Martha. Just a second, Martha. Michael, we call it, is it Fantastic Fridays or whatever, where we actually take phone calls?
Yeah, so on Frankly Friday, we unmute people on the webinar. All the clients that have, anyone can do it. They just have to have a mic on their laptop, and then we'll unmute them and, just kind of have a conversation. We'll sometimes unmute a couple people at a time, go over specific questions that are a little bit more in depth, certain topics that we'll kind of all talk about and cycle through whatever clients want to speak. And it's, man, Friday is my favorite day. Like, we've had some really, really good conversations and a ton of learning. Those are the days that all the other clients are like begging us to, record it and put it out.
Yeah.
And it's just been consistently really valuable for everyone. We don't do the whole, most of what you see in the trading world right now, especially retail trading, is, chat rooms and different things like that. We don't do that because humans have a tendency to overcomplicate things. So when you put, 30 people, let's say, in a chat room that all have different experience, different, techniques, there's no consistency, and you really have no edge over the market, because that's all the market is just a bunch of people guessing. Maybe it's going to go up, maybe it's going to go down. We don't do any of that. We have a simple set of rules, and it's consistent against everyone that uses the technique, or at least everyone that's successful. We have had a few people in the past that, have wanted to modify it too much or make it their own. And it's not really built to do that. So we avoid the chat room type scenario and, find it much better just to keep everyone on the same path. And we can, have communication within that path. Like on Frankly Friday, we can talk about different aspects of it, but we try to keep that foundational core very consistent and unchanged, so that, people can learn it and get better at it.
Well, the platform that we use, GoToWebinar, allows people to type in questions, and during the entire course, there he is. There's Tim. Hey, Tim, can you hear us?
Hey, I can hear you.
Okay, hold on just a sec. Good, glad you made it. Anyhow, it allows you to ask us questions during that seminar, and they immediately respond to them. But they're also, the big thing is, there's our proprietary charting system on there that tells you when to get in and when to get out of a deal. That stays up there. You're looking at that, and they're telling you what they're doing in real trades. They prepped one. They're getting ready. They tell you why they prepped it. You can see it on the chart. So they're not doing the trades for you. They're doing the trades in their own account. But you can turn around and you just learn that stuff. You see it enough times, then that you're just a natural with that chart, and you can get in and out of any kind of stock you want. They primarily do QQQs and apples and SPYs, SPY. So it's a great seminar, but again, it's not a chat room. Now on Friday, when we open up the phones later on in the session on Friday, then you're on the phone, you can talk, hear, and it's really great. Tim, before we get around to you, Martha, one of our best clients, popped up a little message. Martha, did you want to say something there? No, there she is. Yeah. Question for Micah. You take it there, Micah.
Yeah, Thinkorswim stops fill at last and ask. How should I set my stop? Thank you for all you guys do for us. So I'm guessing what you're talking about is your trigger. Now, stops are often misused because people think they're too general. Like, I'm going to put a 5-cent stop and it's magically going to, fill me 5 cents from where I entered. It's not necessarily the case, right? A stop is an order just like anything else, and it has filling parameters just like an entry order. So when you set up a stop, you have to know, is that stop a market, or is it sending a limit order? Is the stop 5 cents away from what? Is it 5 cents from the bid, from your ask at your time of entry, from, what is it? So however the terminology is set up for Thinkorswim, I'm guessing last. Last is when an order actually goes off. So you want it to actually execute an order at your stop, and then it will send your limit hopefully at the same price to fill with it. If you really want to make sure you get out, you can make that a market order as well. You'll lose a cent or two every time it goes off, which isn't too bad because we try never to use our stops. It's just kind of a worst case scenario. But Tim, how does Thinkorswim handle that?
Yeah, you actually covered it pretty well. What I do is I set my stop. I have two stops that I set, one for 4 cents, one for 5 cents, and it is set from the ask. So I know exactly when it's going to execute. I've found that to be the most reliable way. But here's the caveat on this. This is just a safety net, right? It's just a last ditch safety net. If nothing else works, you have those stops in there so you can get out. But 4 and 5 cents leaves you enough room theoretically for it won't stop you out if it takes a sudden turn the wrong way. But here's the caveat is you should never let that stop execute. Okay. It's just a latch ditch effort. You should, when that stock turns, get out. Just get out. With the idea being you can always get back in. You know, if it does a momentary reversal, it starts back in that other direction, and it's got strong motion, then you can always jump back in. But waiting for that to hit that stop, you're just giving away money, right? And our technique is set up, it's pretty clear that when we see reversals, we get out. Just flat, just get out. Okay. Now, the only time that there may be a variation of that is on a slow moving tick, right? It's sort of moving up and meandering, but it's not. But to me, that's a trade you probably shouldn't be in anyway, right? We wait for strong motion, strong momentum. And Martha, I mean, whatever you're doing is working, clearly. Every day, you're typically the first one in with a profit. I see more positive trades out of yours and very few negative trades. So what you're doing is great. But here's the thing for other people who are listening is, what Martha's doing is right. You know, she had losses like I did when she was learning the technique, but she got it down. She's great at pattern recognition. She's keeping her eyes on other opportunities in the ETF range that we trade, and finds winners. So that's kind of a long answer, but there it is.
Yeah, I think the key here, and of course Martha's mastered this, is this is the simplest technique on the face of the earth. The key is learning after you're in the position when it turns like it's going to go negative for any amount, get out of it. Now, some people would say, well, I'm going to wait because I know it's going to go up. That's when you're going to become a loser. Because you get out, for instance, like today, there were 5 transactions. There were 3 Qs and 2 apples. 1 apple even, 1 apple fantastic 8.79%. The Qs, there was 1 loss of 2.65. That's a very small loss because when you look at, there was 2 other Qs and the highest was 7.37%. So, take these small losses, get them out of the way. We never speculate. And these trades are only 15 to 30 seconds. Mm-hmm. Sometimes maybe 45 seconds. You're in and out and you're back to cash. And then you quit for the day. You don't hang around and do this all day because, but the whole key is, and Martha's learned this, and certainly Tim has learned this, and Micah and all our clients, they learn, specialize in just getting out of these things fast. And that's huge.
Yeah, because there will always be another opportunity. When we first logged on to this podcast, if you guys remember, I was sad that I missed that put at 77 cents. 77 cents. It's hanging out at $1.18 right now. So, you got what, 60, 70% worth of room there. There's plenty of times to grab it. We're doing this and most of the time, oftentimes Tim and I miss trades because we're answering questions and things like that. Mm-hmm. But I mean, yeah, $1.20 now. So like, you don't have to try to squeeze things out of these sideways moves because when it happens, you go from 70 cents to $1.20, mm-hmm. $1.25 now. Like, it's just 26, 27. Like, I don't know what else to say. If you don't have the patience to wait for these types of moves and you want to make a trade every 5 minutes, then you're just going to get eaten alive in the long run. I guarantee it.
Yep.
The patience to wait for a move like this is everything. Look at if you're got your computer up, look at SPY right now. Look at the charts right now. It's so clear.
Yeah, and in fact, at 11:10 on Q, it broke the lower Bollinger Band. We had a good widening on both bottom and top, and I went ahead and entered that trade and rode that for 8 cents. And see where it touches the Bollinger Band, the lower Bollinger Band. It goes and tests that, and it continues down, and it may do that again. And this is the big reversal that Mike and I have been kind of waiting for all day, and here it is.
Was that after we got off this afternoon?
That was after we got off. Yeah.
I'll say, well, give it to me. I didn't send that, but we'll put it on for tomorrow.
Okay.
I know it was a cute. What'd you buy it at?
Yeah, let me go back in here. Go to my thing. So I entered at right at 101 and got out at 110. 111. Sorry.
Fantastic. Okay.
God,
so see that would have been what?
That's 10%. Yeah.
10 cents. So 10 cents. Yeah, about 10%. Right. That quick. Now here's the other thing. Hey, Robert, we'll get to you just a sec. Here's the other thing. In this technique, you don't worry about trying to evaluate. You're not a day trader. You're not trying to evaluate what stock. Is this stock going to go up? This stock going to go down? We don't care. We're going to make money. If it goes up, if it goes down, we just want the volume. We just want activity. So we eliminate that fallacy there where people think, they don't have to be real smart or try to worry about that kind of stuff. It has nothing to be real smart. If they're real smart, they don't worry about it. But there's a key difference. And we're in and we're out and we're always back to cash, in a few minutes or a few seconds. I just had a text from Randy, and he's going to be on here in just a second. He got delayed by a meeting, so he'll be on in a few seconds. Randy is our traditional covered calls and modifications, sort of getting back toward the. He's got some momentum trades that last a little longer than these moment trades.
And I just went back in at the 235 at 96 and just jumped out at 105.
Good. That's another one. Okay.
Yeah. See, and this is
at $1.66 77. Like what?
Yeah. Yeah. This is a classic pattern, folks. You cannot lose on this. When you see it jump out of that Bollinger Band and it continues straight down, kisses the lower Bollinger Band and then continues down, continues. And there was another 15 cents of profit in there. Now it just reversed. It's back in. May see some buying going here, but anyway, we're not in our session right now. But just wanted to show you. This just illustrates and reinforces what Micah was saying: is that you don't have to chase anything, right? You just wait for that trade to come, and they come every day. And that was huge. That move right now. If you'd stayed in that whole thing, that was, oh my gosh, that was a 25-cent move. Right there.
Is that the last you gave me was in 96 out at 105? Is this a new?
Yes. No.
That's it.
Yeah, I was just illustrating that whole leg down. Was 25 cents.
You pushed this 14.76% return, which was during the session. Now you're probably up closer to 30% with these two trades.
Nice.
Yeah.
Nice. Roberto, how do you have your platform layout in Thinkorswim to execute these quick trades? It's simple. It really is simple. Thinkorswim allows you a one-click enter. You have to go in and turn off some things, but I just shift-click on the ask, and it fills. All right. Then you have the buy next to that line at whatever strike you're hitting. You right-click on the buy, and you set your closing, your sell to close right there.
Marcus, I just had a note from Randy trying to get in. He says he's online, but Marcus needs to add me. So if you do that,
There he is.
Excuse me, Tim.
Yeah, no worries. Hey, Randy.
Oh, there he is.
Hey, how you doing? I'm here. I'm back. I made it. Made it through all the rain.
Good stuff.
Yeah.
Yeah, I mean, like it's just you take 166 minus 77, 89 over 77. Yeah, you got 115% move there.
Mm-hmm.
You know, we're looking for 3 to 4 cents, 5 cents. Like, have the patience, guys.
Mm-hmm.
Patience is so key because, you know, the market, it's even harder to figure out when it will move than what direction.
You're not going to believe it, Tim, but those last two trades got you up 33.13% for today.
Wow.
So it's good. Randy, how you doing? Glad you made it.
Good. Yeah. Glad to be here.
Great.
We got lots of rain going on here today.
Yeah, you know what it is here in Puerto Rico?
Probably 85 degrees or something.
No, it's going to be 82 for the next this week.
Oh, it's cooling down a little, huh?
No, it's still it's been about 82.
Yeah, well,
Get your jacket out, Joe.
We've already had the high of the day. It's just going to get colder as the day goes on. So
What when we had the session this morning, Tim brought up that he's got a new procedure here that he thinks everybody's just going to really benefit, and we said, well, we'll have it on our podcast because people can ask questions on the podcast, and then tomorrow, Friday, when we have our regular Friendly Friday sessions on the phone where people can call in, we can cover any additional questions. People didn't realize that this is being recorded today, and this is going on YouTube immediately after this session. So if they weren't going to be able to make it here, they'll be able to go back and see the recording, and then they'll be able to attend the sessions tomorrow and ask any questions they want. So before we get Randy, Tim, why don't you come in and kind of explain what that is, and then we'll get over to Randy.
Yep, absolutely. This is real simple. So last night I went through and analyzed the last 50 trades I had, and in Thinkorswim it gives you the exact moment you enter, the exact moment you get, so you can go back to the charts and you can see what was going on. And what I noticed was a tendency, let's say it's a call that we're looking to get into, as when E1, or excuse me, when the tick crosses M1, and it seems to be at an angle greater than 80 degrees, and it's unbroken, it has a tendency to keep going. There's momentum behind it. It'll break the Bollinger Band and it will keep going. And my validation point has typically been when it breaks the upper Bollinger Band and continues on. Most of my trades are that. But I saw there's an opportunity when that pattern lines up, the tendency is for the tick to keep going, to keep rising. So it told me that I'm entering my trades a little late. I could enter my trades earlier when those conditions are there. I can enter my trades earlier and pick up another 1 to 2 cents on each trade. And I wouldn't have seen that unless I went back and I analyzed my last 50 trades to really see what was going on. So the lesson is here, when the tick breaks M1 on a call, it's rising. If that line, that tick, does not break when it hits the upper Bollinger Band, the tendency is for it to keep going, to keep rising. So I've decided that I'm going to enter my trades before it hits the upper Bollinger Band and pick up an additional 1 to 2 cents. And that's it. That's it, basically.
Okay, great.
And it works on the put side as well. You get an unbroken line that is at an angle of 80 to 85 degrees down. That tick or that price, that momentum will keep going.
What do you mean by unbroken?
Okay, the tick will rise if that line does not break. It doesn't veer from that trajectory. It remains a straight line all the way through. without varying, without changing, its tendency is to keep going.
You'll actually be able to show this on your charts tomorrow.
Mm-hmm.
When on the situation, how you evaluate, and then can you describe it? So everybody, if you're listening to this and you don't want to ask a question of that, you can ask a question of him right now on that. But this is being recorded, so if you want to hear him say it over and over, you can just go back in a few minutes after we're through here.
Yeah.
And if you subscribe to our service, you can show up tomorrow, our normal session. It's Friday, Friendly Friday, and you can talk to him on the phone, as anybody that's attending the session can. That's fantastic, and you'll be able to actually demonstrate that tomorrow. So you can explain when you're looking at right on the chart.
Mm-hmm. Yep.
Now let's turn to our old master here, Randy. Yeah, somebody.
While Tim was explaining the process, SPX just did that on the downside.
Really?
I followed it right along. The tick was heading down. It stayed in the straight line. It crossed below M1. It crossed below the lower Bollinger Band, and it's still going down.
Yeah.
And so
it's exactly the way that Tim just explained it. Is exactly how it's going.
Randy, you would have normally gotten out of it by now, right?
Oh yeah, I already made 4.2%.
Yeah, but I mean, what you heard today is the first time you thought about that, and so you actually did it based on what he was talking about today.
Yeah, from an entry perspective, but I didn't stay in it as it continued. I just took my 4.2% profit right away.
Okay, why don't you explain to our people, since you're our old Grand Master, and I say old, he's been with us 14, 15 years, and so you just look at him. He's got a beard. I think that's a wig.
Joe, when I started, it wasn't white.
It was black.
Yeah, it was brown. Yeah.
Yeah. Why don't you explain? I've already explained that about, since I didn't know if you were going to be here, about the website and how people can find out all of your programs and what they cost, and sign up for the free cow report, and they can see all the emails that go out and how you answer people and so on and so forth. So go ahead and kind of bring them up to date on what you're doing there.
Well, along with the intraday streaming charts is what Tim and Micah use, and those are real helpful for. I do some micro moment trading on SPX throughout the day. Usually,
it's old man. It's old man micro moment trading, because like yours go longer than 15 or 20 or 30 seconds.
Mine are more like a minute and a half. I mean, sometimes it goes really fast in a minute, but I'm not in and out in like 14 seconds like they are.
Yeah.
It doesn't move quite as fast as that. But in addition to me just doing those kind of trades, I teach the covered call process during the Wednesday morning live in the market webinars. And not only does it support what Joe teaches in the 2-day covered call seminar, it also adds additional techniques that I call the platinum techniques, which takes the covered calls to a whole new level by leveraging options instead of just the stocks. So real quickly, for those that don't know what a covered call is, we buy a stock and sell a call against it, which gives somebody the right to buy our stock back. And we do that so that when that happens, we make a profit. And we sell in the money covered calls. And so the stock can go up, down, sideways, backwards, forwards, and still get called out for the profit. And the goal is to be called out, which means that we get all of our cash back at the end of the week or the end of the month.
Yeah, we treat that stock like a piece of real estate. So he says we buy it, then we sell a call against it. Actually, what we're doing is renting it. And then once he rents that, he's got all kinds of abilities to get in and out of it. If it goes up, to make more money. If it goes down, to make more money. There's no way he cannot make a lot of money on it, because we're renting that stock just like property. So if you own real estate, you always rent it. You don't not rent it. So go ahead. I'm sorry.
And so as I go through and actually teach how to do the processes on the Wednesday webinar, which is recorded and then archived. It's live during the market while I'm doing it, but it's being recorded at the same time, and you can watch it over and over later on, or if you're not able to be there in person, you can watch it later on as well. But not only do I teach the techniques and processes, but I also go through potential new positions. And during the week, when I find a position or a management process that needs to be implemented, in my own account, because I use all these techniques in my own live account, I actually send out an email alert that says this is what I'm planning on doing, so everybody can follow along hands-on in their virtual trading account as they're learning, and learn step by step exactly how to do the processes with real positions out there in the market, not just examples out of a textbook. And so last week, the positions that were implemented and closed out, and the closeout is the important part, because I have my cash back. So I don't have to worry about what's going to happen overnight, over the weekend, and I can find new positions the next week. But Intel, so these are the kinds of positions. Intel, good, solid, quality companies, not speculative companies out there in the O zone. Intel was 19.2% return for 9 days. Apple was 5.0% return for 4 days. Alibaba, 11.1% return for 4 days. Microsoft, 3.7% return just for 1 day. In and out of that position the next day. And already this week, I've already been in and out of SPY for 11.1% and in and out of the NASDAQ 100 index, and that was 6.2% return for Friday to, so for like 5 days. We just got another entry. I always like to hear the little ding in the background.
This is unreal.
That's always a good thing to keep things going.
Yeah. Just trying to enter in the high 80s and the high 90s. It's already at $1.09.
Good heavens.
Yeah, and I'm still watching SPX, Tim. If I would have just stayed in it, I would have had like $3 of profit. It's still going down. What you said, breaking through M1, then going through the Bollinger Band and continuing to go down, and it's still whoa, man, the market's down 250 points.
Yeah.
Something just happened.
The news. What is happening right now?
The European market just closed, but about 10 minutes before that, something must have come out in the news, something on the coronavirus or something, because it just took an about face there and started heading down.
Yeah. I think what's fantastic here is Tim explained that process, and of course this is being recorded, right? And so what happens? Randy's over here and actually does it, and what could a better example than could you possibly have than that?
It's perfect. I mean, it's unbelievable that Tim. Yeah. I'm watching as Tim's explaining. I'm going, okay, let me see. Oh, there it is.
What?
It was on the put side, not the call side, but like Tim said, it works either direction. Yeah. It's just breaks through M1 with the dramatically down or dramatically up, and then breaks through the Bollinger Band. And as long as it hasn't made that V and changed direction, it just keeps going. It's still going down.
Yeah. Q is dropping like a rock here. Wow.
Yeah,
it's going to do another bounce off of. See if it bounces off of the lower Bollinger Band and continues its travel.
Yeah, Nasdaq's down 182. It was only down like 50 when I jumped on here. So
it's called. Here's a good example.
Never had on a podcast. I swear.
Here's a good example of what I was talking about earlier. It doesn't make you any difference which way the market goes. They don't care. Yeah. They're going whichever way it's going. They're going to switch doing push doing calls. So they Randy just made a bunch of money. And the market's going down. Now most day traders said, "Oh, the market's down. I'm going to lose money. I'm going to lose money." Well, that's because you're a day trader. And, it doesn't work. So fantastic about this technique.
Yeah.
So,
yeah. We
if you have any questions, you can type them in there. These guys will answer your questions.
Yeah. Let me answer a question Joseph asked just a while ago. Joseph says 80 degrees compared to M1 or compared to horizontal? It's compared to horizontal. Just draw a straight line across, or if you still have one of those, what do they call those when we had those in school, the plastic, it's not a protractor. Oh, anyway, it shows angles.
Yeah.
Anyway, hey, and there's another little thing to kind of add to this. When it's traveling in it's got strong direction, like we're seeing on Q right now. If it bounces off of the lower Bollinger Band, it also tends to keep going down as well. It's another validation point. Y'all too busy making trades there, I can tell.
Certainly, I was tempted to get back in another one, but I'm holding off because I'm talking on.
Now remember, these are real trades they're doing with their real money, and so
Yeah. I mean, the bottom line is this stuff works. I'm looking at IWM now. It's doing the same thing. It just bounced off the lower Bollinger Band, and it's at like a 95-degree angle. It's almost straight down, and it's just dropping like a rock.
Oh.
Good.
This is what we sacrifice. This is what we sacrifice to be on this podcast. Like,
I know.
Like and subscribe right now, because this is what we're missing for you right now.
Exactly. What thing? It takes me off the charts here where I'm like,
I know. I know. And
man,
the last few weeks, we've seemed to have gotten more action during this half hour.
Well, I think what's amazing is because the morning sessions usually last about an hour, so these guys really technically work, 5 hours a week. Now they're making on average, 100 and something, 14, 15, 16% a week. So they don't need to work anymore. In fact, I always stress, don't work any more than that hour.
Yeah.
Why? You make because your mind gets muddled up a little bit, and there's no need to. Because when you compound this money, I mean, it's just incredible what it amounts to.
Yeah. I mean, how many years would it take to get 100% turnover in or 100% profit in your portfolio, with an outside management doing it? We do this in a week with this technique. It could take years for your regular portfolio to show those kind of returns.
Well, you're up 80% as of these last two trades you did on the podcast, or right before the podcast. You're up 80%. Tomorrow is a Friday, and so you another 20%. You're up 100%. So you probably make your 115 or 16% for the week.
Yeah. It's just incredible.
And Randy's over the different kinds of trades. So there's a process here for everybody.
Yeah.
And Randy's really is a much broader. So many things that he can do.
Yeah.
There's something there for everybody. You don't have to do this micro moment stuff, which is fast. You can do some of Randy's lazy trades. In fact, when we got started, you could only do one expiration a month. That was the third Friday. Now they have expirations every Friday, but the third Friday, and you would enter the deal, and then most people would just not look at it again until the third Friday to see if they were called out. If they were called out, they bought another stock and rented it again. Yeah. If they weren't called out, they could do what they wanted to. They could re-rent their stock.
Yeah.
But now you can make more, and we used to try to make 5 or 6% a month. Now you can make that in a week, easy.
Yeah.
Doing Randy's, slower. So you don't have to be able to do all this stuff real fast.
Yeah. I didn't. What was the total on your returns, Randy? You ran off that impressive list. I couldn't add it up in my head, but it was significant.
Oh, I didn't add it up, but I just did another micro moment trade. Let's see, 40 divided by 106, 3.8% return. And by the way, just so you know, Joe, I was in at 11:37 and 27 seconds, and out at 11:37 and 35 seconds.
Fantastic.
8 seconds.
I wonder why you were panning.
That's right. So see, I'm in the group now. At 8 seconds of profit for 3.8% return, just like that.
Hey, we were just talking about. I just want to point out on Q. See where it is. It touched the lower Bollinger Band once, went down, touched the Bollinger Band again, headed straight down. It's a great indicator on these moves, and this is a Friday move right here that we're seeing. Saying, watch it, go ahead and bounce off that lower Bollinger Band again. Dang, I should be in this trade. Mike is right. Just get into this. Get into this thing and join us every morning.
Eventful podcast, man.
So yeah, it's an expensive podcast. That's right.
Yeah. Oh, that hurts my soul.
Yeah, but you know what? We'll trade tomorrow, and the same opportunities will present themselves. This is pretty nice. I mean, you can't miss on a move like this. Just jump in.
I was rattling off everything you guys kept talking over me, but you weren't talking because I had my microphone muted by accident. What I was saying was Randy's trades. It's all real money. They're money. Now the problem is people say, "Oh, yeah, that's a bunch of people. They can't make that kind of money." Well, we have one account, a corporate account. And it's a corporate account because we're going to have it audited and not get into all their private stuff. And I don't know how often they audit it, once a month, once a week, once a year, however it is, but it's going to come out. And let me tell you something. And I don't want to see any emails. If I get an email and say, well, I really want to sign up for this, but I want to wait until I see an audited statement. You do that, I'm not even going to let you into the deal. If I do let you in, it's going to be a hell of a lot more money than what it is right now because those statements, the entire world will really get in there and get those accounts. But so send me stupid emails like that because it ain't going to work. So anyhow.
Fully agree. I fully agree.
Yeah. We'll start publishing the numbers on the corporate account, and I'm predicting people are just not going to believe the numbers that they see. We're consistent with what we do every day. All I can say is get in early.
Yeah. Okay. Do we have anybody with any questions or anything? We don't want to ignore you.
Or if you caught that trade anywhere along there.
Mm-hmm.
And if you, like I say, if you want to see these real trades, an entire session, it's not going to do you any good to try to copy it because it's going to be old data. But they're usually only 1 or 2 days old. You can find them right here on YouTube. Where you're in on right now, you can find sessions that they do, and you can see exactly what you're getting.
Mm-hmm.
So, well, we don't have any more questions, guys. It's 12:41. We usually run here about 45 minutes. So unless y'all have something extra, we can call it, and then you guys can go back and trade.
This is fantastic trading right now. This is so volatile. That's what you want.
Yeah. Yes,
Okay.
we do. Love that. Okay.
Okay. If there's no questions, guys, thanks very much. Been a great session. And again, this has been recorded. It'll be on here in a few minutes, so you can go back and listen to Tim, and you can actually see Randy doing it while he's talking about it. So that'll be good.
Yeah.
Okay, guys, thank you very much, and we'll be here next Thursday. And if you subscribe to our service, be sure tomorrow come in and ask any questions that you want to ask these guys about this today. So,
awesome.
Okay,
thanks a lot. No, we're on our way back, so we'll see you guys on the webinar if you're over there.
Bye-bye.
Okay, bye-bye, guys.
So long. Have a good weekend. Take care.